Hello guys, welcome to a Trading Parrot. Nvidia is giving more than a headache to a lot of investors. In today's video, I'm going to cover general markets and specifically I'm going to go to some indices and catch up with what's going on. The ball is starting to roll, a snowball effect could start, so we better are aware of what's going on. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. So let's go straight into the economic calendar and let's see what's coming in today. We got on Wednesday at 1:30 p.m. the housing stats and the FOMC minutes in the evening. Unemployment rate to come on Thursday, and there's a bunch of things currently making a lot of noise. Specifically, the delayed September jobs. BLS releases September NFP November 20th. The release is confirmed and it could have a positive impact on Bitcoin. Key labor data post shutdown. Weak print could revive the cat bets. Let's remember that in the past few days, the rate cuts off were dropping from 60% to just below 50%, and that has been partially what has been spooking the markets. US-China tariffs have stabilized to 6. That is on the bullish side because it's still not moving and not progressing that much. The least we have tariffs news from Trump, the more peace of mind we're going to have, at least as a trader if you're trading long. In today's video, I'm going to have a look at oil as well. Crude oil specifically, I'm going to do some TA with some charting. This at the moment shows as neutral. Prices have been coming down 1% on weak demand signals. Energy proxy for inflation expectations. Weak means deflationary tone. And we've seen already 3 days in a row of the S&P coming down. So that is what's currently driving the VIX index up, which surged 10% over a single day. We'll see if it has crossed already the level of 25 for RSI, which is my level in the sand, to start calling for that expansion or start confirming the expansion I've been calling for months now. And since there's been all of these fears, there's been increases also in the US 10-year yield. We'll look into all of that. The 6 months rising channel has been breached. Best case scenario, the undercarriage is backtested before it lets go. Worst case scenario, it just lets go. So pretty bearish view from this influencer. Gold is 54% up so far and is the best performing major asset in 2025, while Bitcoin on minus 1% is now the worst, something we haven't seen before in any calendar year, the inverse of 2013. Very interesting. If you put all asset classes in order, I find fascinating to see all of this so tidy year by year. You get gold and EAFE stocks at the top, 26%, emerging market stocks with 24%. Nothing even comes close to gold at the moment. Of course, individual stocks like Nvidia will definitely outpace gold, but as an asset class together, not yet. S&P 500 suffers 4 days losing streak for the first time since August. At that point, there was still an uptrend because we put a new high and a higher low and we continue. But in this case, we already have a lower high and we already took that level. So from the point of view of daily time frame, this could be considered as a break of structure and a bearish one. All eyes are on Nvidia's Q3 earnings tomorrow. So this is actually today. Estimated revenue is 55 billion. They are expecting 57% up and an estimated EPS of 125, a 55% up. This is how the chart is currently looking with the PE ratio coming down. And I guess that's the main reason why people are starting to get very stressed about it. Jobless claims rise to 232,000 above estimated number of 223. And remember, jobless claims increasing is a stimulus for declaring that something is broken and that the rates need to be cut. So at the moment, it's an arm wrestling between different aspects that either push the rate cuts or reduce the rate cuts. This is an interesting chart that puts in perspective the different bubbles that we've seen in history, or some of the major ones. If we put the AI bubble in perspective against the Great Depression, for example, in here, and specifically we try to pair it with the previous bubble and take in consideration the length in months of each individual one, you can see that the Nasdaq at the moment is sitting roughly around here against the Great Depression, meaning that from the point of view of timing and magnitude, we are still slightly below. But be careful how you interpret this, because there are many other ways of comparing the bubbles. Not just the time and magnitude is sufficient to say that we are at overextended levels. There are plenty of other metrics that are way beyond what happened in the Great Depression already in the current bubble. So don't count victory, basically, that we have so much extra time before it pops. So basically the takeaway is that 5 pretty much out of 6 bubbles that were picked for this example, we are still early and the bubble should not pop yet. There's still between 25 to even 50 more months to go to the upside, according to this analysis, or at least that's what I'm reading from just checking the charts. Japan's 30-year bond yield has never been higher in history than it is now. The global carry machine is on life support. So we've been covering Japan Nikkei and their own yield, 10-year yield, to understand what's going on, and I'm gonna look at that chart later to see how it's looking today. But I wanted to pull this particular tweet from Ted about the VIX is now up for 4 consecutive weeks. The last time this happened was in March in 2020. Interesting, because I've been saying once we get into 25, we start talking. We look into the VIX as well. The S&P is on track for its worst November since 2008. So if you are thinking that Bitcoin is misbehaving according to what it should be doing on a November or on an October, here's your answer of why that is happening. It's pretty much general markets translation into what Bitcoin does, which is just to follow the other assets. So let's go into some indices first. I'm going to start with the dollar. I primarily like to look at things in indices in the weekly time frame, and then I look for zooming in into the daily, and I like to see the big picture in the monthly chart. So let's start with the weekly on the DXY, which is the dollar index, and you can see that we now have a nice and cute engulfing potential green candle in here that could signify that we are going to continue to the upside. The RSI has been driving this momentum. It has been saying up. Every time that we go lower in here, we still say, well, we still don't break anything on the RSI, so we might as well have some upside, and it's been the case. Even when intra-candle we touch that 57, thanks to this week at over $100, we say nothing is broken, we might continue up, and that is what we seem to be doing as of now. Now, be very careful, because that $100 on the monthly is the previous support, so we could see a rejection from there if things continue very bearish for dollar. And if we see a massive rejection from there with a lower low relative to 97, we could lose the multi-year support. The multi-year support, which I haven't put on the monthly chart, is something in the terms of something like this, right? And if you break this 96, basically you have an unknown level of downside to be had. But if you hold that level and you manage to conquer the $100, pretty much 105 comes into the table. Going back into the weekly, we can see that set up because we have a double bottom that has a target into 101. Getting into 101 seals the deal for potential continuation, because at that point you complete the larger structure, which is also a double bottom, and that structure I already had a target into 105. I'm trying to take 2 steps ahead of what could happen and see confirmation for continuation. Gold is currently having a dead cat bounce in here. We'll see if it's a dead cat bounce. If it cannot really cross beyond 4.2k, it could stay a dead cat bounce. We already have 1 rejection in there, and if it rejects once more, we could be heading into the 21 weekly. Now, invalidation point is we close above 4.2. Going into the VIX, you can see that we stick our head above my line of resistance, which is this one place at around 25, but we have been coming back down in here. The RSI has a higher high in here, so RSI says we could do it still. Potentially we can do it and we can cross 25, and that's threatening to put all risk on assets assets and even the risk-off assets, everything together really put them down if this starts pushing into this direction. RSI says that that is coming next. NDX, we can see how this rollover, and now it did a major breakdown. 3 days in a row, 3 weeks in a row, I have to say that is significant. So let's have a look at the monthly chart in here. That is our revenge rally taking place in there with a higher high that is bullish, but at the same time we see a rejection there. So this channel, we could say that is possibly continuing in this direction. We just hit the top of the channel once again. That means that we could be coming back down into 22K or into the 21 weekly from there if we seal this red engulfing candle at the same time. S&P, similar story. Dead cat bounce, revenge rally in here into 75, engulfing red candle. 21 weekly is at 587, and that coincides with a rejection that sends into the retracement of 0.5. So from here into 0.5, based on this week, measuring this week into the top, that gives us that level. Notice that the S&P loves doing that setup from bottom to top and then a 50%. From bottom to top, a 50%. Bottom to the next top, 50%. So if we repeat that thing that the S&P seems to love so much, we go into 585, which is also the 21 weekly. I'm not forecasting it, but I'm saying if you're not prepared for a level that is so frequently happening within your own risk management, potentially you're doing something wrong. And I got a question from my community on Patreon. Someone asked me to review US oil, and that's what I'm gonna do next. And I'm gonna do it on the monthly first to give you the big perspective. This bounce from 0.86 into $130 on the monthly, starting from around April 2020 into May in 2022. Interesting, because at that point I think we started bottoming on Bitcoin. So with the oil being at the top, you can see Bitcoin finding a bottom somewhere in here once the oil breaks down, and that allow for all of this to come up. Remember, Bitcoin uses energy, so no questions about that. That is kind of an obvious one. There has to be some relation between energy source and energy consumer, right? In here we have a resistance on the price, and we have also a resistance on the RSI, but on the RSI there has been already a breakout, and the oil coming up, you can see that there is some sort of relation in here where the oil was coming up, Bitcoin was going up, but then it started coming down and it started pushing back down. But still we had our rally in this area, so it's not always correlated. Focusing more now on the oil price action, let me see what I can find, because this is clearly in a downtrend on the monthly time frame. What will be really fantastic will be in the next few months for crude oil to form a double bottom like this with a breakout that follows up with what this breakout, which is pretty low quality, because you can see it broke out, it came for a retest, and it's been 1, 2, 3 months coming down, still not taking the low. That's the good thing, but 3 to 4 months just retesting and not doing anything by going down. But maybe what we are looking for now is to form the double bottom and to start completing into the neckline of 70. Once we get to 70, if we see a breakout from here, we could be seeing like another swing that is more sustained, something looking like this. Now, certainly this area in here could be an area for accumulation around the $58, but always with a view in mind that if the general markets puke like it did in 2020 in here, so if you get a bubble in AI and things enter into recession, expect a move that can do anything to the downside. So maybe have a plan for TCA if you get those opportunities within a recession. Now, if you don't get the recession, you can have a small position that can survive from here and maybe start a leg to the upside as well. Notice the nature of this commodity that is very oscillating. Obviously, with inflation, you could see higher prices, but in general terms, you can see how it fluctuates between the cycles of the economy itself. On the daily time frame, I want to sniff for a potential breakout in here, but I still don't have it. This, you can see that there is something going on in here, but it's very noisy. It still doesn't tell me this is a clear breakout. I mean, you could place it like this and say that it's starting to roll up, to start to gain some momentum because it's kind of seeking the upside, but it's not doing it in a way that is visible for the naked eye. And on On the weekly, that is also the case. We are still against resistance, and on the monthly, we got that breakout that is currently bleeding 4 months in a go. Let's look into Nikkei as well, because that one is a serious one that can also put a lot of pressure on all markets. And we have still that setup that we call out on gold. Remember when we broke above this level on the weekly time frame, then we came back down, and that started this area of consolidation sideways that we still don't know, but I have some bias that it could be bearish after having hit on the monthly an RSI of 92. If we get a similar thing on the Nikkei, which already hit an RSI monthly of 82, and we close below here, we could see some follow-up to the downside into the 21 weekly, which is currently sitting at around $40. On the daily, the S&P is starting to look like it's got a change of structure in here. I'm no longer seeing, since around 12th of November, a new high, something that clearly in this area has been always been respected. You can see high, low, high, low, high, low, never putting a lower low. This is a lower low relative to this, but after having had a higher high, and it gets reclaimed so quickly with a V recovery in a new high that invalidates what happened in there. But in all this area in here, I see some damage building up that could potentially build into something. For the bull case, we still have that 706 and 726, which is the levels where the risk of the shorts is located. So if the price really is faking this whole move and decides to continue to the upside, it can very quickly take that. Now, if this turns into a local top, we have a tempting area of 616 followed by 606 on the S&P to hit to the lower end. Thanks so much for watching this video. I'll see you in the next one, and don't forget to hit the like, subscribe, write down a comment down below. I'll see you in the next one. Bye bye.